Well, thanks for joining. I see some familiar faces out there and some folks that I don't know personally yet, but I thought we would use the time wisely over the last couple of weeks. Surprisingly, there aren't too many people filing for divorce in the midst of these uncertain times, but we are looking forward to better days ahead after 12 weeks of isolation with your spouse. So we'll be prepared. And really, that's the whole point of the SBA programs that we've got going. I've been sort of an addict of watching Fox Business and the briefing and things like that. And really, this rescue plan makes a lot of sense because the administration basically looked out there and said, you know, we could just fund unemployment, but then people would go and just be sitting at home and we'd be paying the bills, or we could infuse cash into small business, which is half of the GDP in this nation. We can keep our small businesses ready so that the moment this thing is over, they can spring right back into action. And that really is the purpose of the Paycheck Protection Program, or what I refer to as the PPP loan program, or triple P. And it's a great program because it is one that provides not just an infusion of cash to your business right now, but then if you follow some fairly simple rules, the PPP program actually turns that cash into a grant to you and your business. So it's a very nice infusion of cash into your business. There's another loan program, which is under Section 7B of the SBA Act, and that is the economic impact, the economic impact disaster loan. Now, those loans have been around for a long time. Anytime you hear of a tornado or something like that, and the SBA coming in, those are the kinds of loans that people apply for. And those are going to be the two kinds of loans that we essentially are going to look at today. There's some other little grant programs and things like that available. But what we're going to deal with primarily is the PPP loan, which may be the one that you've heard about. The goal of Secretary Mnuchin of the Treasury was to have those loans available today. I sort of sensed the winds this morning. It seems like the smaller community banks are already starting to loan. I heard on Stuart Varney this morning that particularly back east, they'd already loaned out several $1 million. But I'm also hearing that some of the bigger banks don't have all the processes in place yet. So what I'm going to do is I'm going to kind of divide this up into two things. We're going to start off, first of all, with the Paycheck Protection Program loans and what's involved there. First of all, for you to get a Paycheck Protection Plan loan or program loan, you deal with your local banker, and hopefully you have an established relationship with your local banker. I know that we've been banking with BOK Financial, which is the former Colorado Business Bank. We've been with them for several years. I reached out to them a couple of weeks ago, and they indicated that they would be making and participating in the Paycheck Protection Program, a loan program, but they were only going to participate with existing customers of theirs. And that's something that you may find. So you want to check with your bank. I know First Bank is an SBA lender, an established SBA lender. And that's a real advantage, I think, if you're dealing with a financial institution that is used to working with the SBA, it just seems almost logical that that is going to be a little bit more streamlined. Now, one of the things Congress and the administration did with the Paycheck Protection Plan loan is they really cut through the red tape. I mean, if you look at this, it's remarkable. We are not even 2 weeks. Well, I guess we're what, a week to the day now since it got signed, and it was introduced the Monday before that. So it has moved at incredible speed. Part of the problem in doing that is it's kind of been a moving target. I mean, literally at our webinar on Wednesday, we shared what was the maximum interest rate for a PPP loan, which is 4%, only to learn right after the webinar that the SBA had announced it would be 0.5% based on extremely low interest rates from the Fed right now. But then Secretary Mnuchin got calls from all the bankers that were involved and said, hey, wait a minute, we pay more than 5% for money that we borrow. So you can't put the loan out there at 5%. So the new loan percentage on a Paycheck Protection Program loan is going to be 1%. And that's where we're at today. Also, the legislation provided that the Paycheck Protection Plan loan could be paid back in a maximum of 10 years. The Treasury has come out with guidance because they anticipate that the large majority of the Paycheck Protection Plan loans, or the PPP loans, will actually be forgiven. And so all there will be is a rather modest sum, perhaps, that won't be forgiven, and that would then carry over, and you'd have to pay that off within 2 years. So how do they decide how much money you can borrow on a PPP loan? Well, it's really a rather simple process. You take the average of the payroll that you've had for the last 12 months. And we just went through this exercise here at the Law Center ourselves. And because I'm terrible with numbers, I let Krystal do all that kind of stuff. But essentially, we have 2 paychecks per month. And it says any pay period which falls within the prior 12 months. So we actually used 26 pay periods. We added up all of those together and divided by 26 to give us our average. And then we backed out the salaries of the persons in excess of $100,000, because the Paycheck Protection Plan only allows you to claim up to $100,000. It's not that you can't count any of the wages or salary that you pay to a person who earns over $100,000. You just can't include the amount over $100,000. So you back that out. You include any payments towards health benefits, medical benefits that are employer funded. So your portion of contributions towards medical benefits, your portion of contributions toward retirement benefits. So if you're matching, for example, 401k types expenses and things like that, you can put those in there. You can also, and again, I don't know where people are that are viewing, but if you have any state or local payroll taxes, you can include those in there. But specifically not included in these is any federal taxes, such as FICA or income taxes that you withhold and pass along to the government. So you add that number up, and then you divide it by 12, so that you come up with the average over the prior 12 months. And that's the average of the 12 months of your total payroll, not including the payroll paid to any employee in excess of $100,000. And that becomes the number that you multiply then by 2.5. So you multiply that number by 2.5. So for example, if your average payroll came out at $50,000, including all those health benefits and retirement benefits and things like that, you multiply it by 2.5, you would have basically $125,000. That would be your maximum loan amount. Now, the application form for these things is standardized between all financial institutions. It has gone through about 3 or 4 variations. So if you started to prepare one even 3 days ago, I'm sorry, there'll be a new form this morning. So go back and do it again. Now, the nice thing is you just fill in your name, address, your tax ID number, you answer a few questions. You're not a felon. You haven't skipped on any previously federally insured loans in the last 7 years, things like that. And then you put in that information, and there's a place where you put in what's your average payroll based on the calculation that you just did. And then you multiply it by 2.5, and you say, this is the loan amount that I'm asking for. Now, those are the factors and the things you use, the formula that you use for determining what your maximum loan amount is, but that isn't the permissible expenditures. Once you borrow that money, you can use that money to pay the salaries of your people, including their vacation pay and things like that. If you are taking advantage of some of the phase 1 coronavirus legislation that gave federally funded leave or medical pay, things like that, you can't double dip. So if you're claiming those funds for medical or family leave, that sort of thing, then you can't include those in what you get reimbursed. But essentially, it's going to take like an 8-week period where you can keep your employees on salary. You can keep them working in the firm or your business, or have them working from home. In addition to their salaries, there's a certain limited number of general overhead items that you can pay. You can pay the interest on a mortgage. You can't pay down the principal on a mortgage, or pay the principal, or pay a bunch of interest in advance, but you can pay down your current interest on mortgages. And the way mortgage is defined is kind of interesting. That is mortgage interest on real or personal property. So I think it would be permissible for you to use it, for example, and you'd have to divide out the interest portion. But if you had a loan for fixtures and equipment, it would seem by the language that I read in the act that that is included as interest on a loan. You can also use it to pay utilities. You can use it to pay your rent. So if you stop and think about this, the federal government is coming in and saying, we're trying as far as possible to make yourself whole. And while we have been economically impacted here, it's kind of been in a different way. As I said, not a lot of people are thinking of filing for divorce during these rather uncertain times and with sort of a lockdown going on. That being said, that sort of affects negatively the litigation side of our house, where family law litigation is about 90% of what we do. At the same time, Krystal, over on the estates and trust side, has actually seen an uptick in business, because we all know we're all going to die, right? And so you need to have your final affairs in order. So the phone has actually been ringing for Krystal over on the estates and trust side of the house, and they've actually been doing initial appointments via Zoom teleconference. And fortunately, the Secretary of State came out with electronically monitored notary rules, so that we can actually now witness wills and things like that across audio visual types of things. So what happens is, at the end of the 8-week period after you've gotten the loan, essentially you do an accounting of the permissible uses, and those that related to payroll and the associated payroll costs. You add all of those up, and you submit that back with an application for forgiveness to your local bank. They look at it, and if it meets the criteria, that loan is forgiven. So, I mean, if we assume for a moment that the coronavirus didn't come along, and maybe we're just having kind of a downturn in business, to come in and have the federal government infuse $100,000 to $150,000 into your business that you don't have to pay back, you don't have to share the revenue with them. If you can even, keep your business running at 50% revenues, you're probably going to be dollars ahead at the end of this thing, because they are going to forgive that amount that went towards keeping your people employed. Now, I got an email the other day. It was sort of a secondhand email where someone was saying, well, I'm going to hold off and I'm going to let all my people go on unemployment, and then at the last minute, I'm going to apply for a Paycheck Protection Program loan. I think that is foolish. I think that is very ill-advised. This loan program is on a first-come, first-served basis. And while Congress and the administration have said if they need more money, they'll go back, we saw what happened just getting the first version of this bill passed. And that is, a lot of people wanted to add pork into it. And I think you're going to see even more of that if they go back for additional funding that could stand in the way. So I think you're taking a huge risk by not applying right away. Today is the first day that you can apply as a business. That would be like a sub-S corporation, a corporation, an LLC. If you are actually employed and you have a business, then you can apply today. Because it's a little more complicated process for people who are self-employed or 1099 employees, or not employees, or 1099 contractors, or you pay people through a 1099, because they're having to set up additional processes to evaluate how much money you would be entitled to under the maximum loan amount. Those applications will not be accepted until a week from today. That being said, we got a notice from Chase Bank this morning, because I have a business account there, that they just simply weren't ready. And they were going to try and get the processes in place. It's my understanding my BOK guy is in a training session right now, and I anticipate that he'll be telling us to send our application in as soon as that is done. So let me just review again on the Paycheck Protection Plan loan. You're going to apply with your local financial institution. And if you have business and commercial accounts at a bank that already does SBA lending under Section 7A, that's going to be ideal. They should have already been in touch with you on that. If you don't have a relationship with a commercial bank that has those pre-established SBA relationships, you can get these loans through any other federally insured financial institution, including a credit union. So if you don't have a relationship with a commercial bank, you might reach out to one of those alternate financial institutions and see what they're putting in place. I know I got a postcard just in the last couple of weeks from the new Ent Credit Union down the street here on Plaza Drive, trying to win my business bank business. And so that might be an opportunity for them to assist you during this time. So you can go to any federally insured financial institution, bank, or credit union. These are limited to businesses under 500, with an exception for the hospitality and lodging businesses. And that is, I was actually speaking to someone who's employed with one of our local hotel chains here, and they had just been laid off. And so I discussed with them, I said, how many properties does your owner own? And they said, well, I think about 13. And of those 13, what they do is they essentially treat those 13 properties, even though they're under common ownership and affiliated, they treat them on a per site basis, and so they can still qualify. And of course, that's very important for being able to bring back housekeeping staff and other people there. So you're going to be able to cover your payroll expenses, any payroll expenses between February 15th and June 30th. Now, the whole idea here is if you furloughed people in anticipation of this, and I'll confess, I furloughed 2 people 2 weeks ago when this first came out. We are going to be hiring those people back. That is the whole point of this Paycheck Protection Program. So if you furloughed people, you want to bring those back. If you don't bring those people back, then you are going to have less of your loan forgiven, because the whole point of this is to keep those people on payroll. So what you can do is you can look at it and basically say, hey, you know, I need to keep my staffing the same. And the way we determine if it's the same, if you were in business this time last year, you go back and you look at the same period of time from last year, which would be February 15 to June 30th of 2019. You look in there and you calculate how many average full-time equivalent employees you had during that period in 2019. And then you come up to today and you say, for example, in our own case here at the law firm, I had full-time equivalents of 8 back a year ago. So right now, with having furloughed 2, I'm down to 6. I'm going to have my forgiveness reduced unless I backfill those positions. Now, in our particular case here, I am bringing back one of the employees. One of the other employees was not performing up to standards. And what we're going to do is we've actually got an ad running to replace that employee, but they're going by the head count. So as long as I have 8 employees during this period of time this year, that is 100% of the employment I had in this period last year. And then I will qualify for full forgiveness on the payroll protection plan loan. The maximum loan amount, I don't see anybody on the videos here that probably is going to need $10 million, but there is a $10 million maximum loan amount. A couple other features of the payroll protection plan loan is it does not require a personal guarantee. This is unheard of in federal lending. I had an SBA loan for capital expansion over a decade ago, actually it was almost 2 decades ago. And I had to literally pledge my firstborn male son in addition to all my other assets, my home and everything. In this case, you do not have to provide a personal guarantee. There is no collateral required, so you're not going to have to give a second or third deed of trust on your house to get the payroll protection plan loan. The loan is forgivable with those limitations on keeping full number of employees, and there's some other calculations in there, but I'm not going to get into all of those details. But a good portion of it is forgivable. That which isn't forgivable will only carry a 1% interest rate, and that will have to be paid back over 2 years. There is no prepayment penalty on the PPP loan. And the notes I have is that most people think these are going to be dispersed in 1 to 2 weeks. I heard Secretary Mnuchin yesterday saying, we want you to apply in the morning and have the cash in the afternoon. I think that's probably what is throwing the banks into the biggest dither. I don't know how many bankers you know, but nimble on their feet is not one of the traits that most bankers I know are known for. Okay, no fees charged by your banker, no fees charged by the SBA for a payroll paycheck protection plan loan. And out of the CARES Act, $350 billion has been allocated. But when you look at the numbers, if every small business like us are going to be applying and asking for $100,000 to $150,000, it doesn't take very long to go through $350 billion. Now, and Andrea said that we would have questions at the end. What I'd like to do, this is kind of the presentation on the payroll protection program loan. Let's take questions now at this point that we might have on this particular loan, and you can either just put them on the group chat. How many participants do we have now, Andrea?
We have 15 in here.
Okay. So I don't care. You can either unmute your mic and ask the question, or you can just put it up on the chat and I can see it.
I wonder if they're able to, they may not be able to unmute them. Let me unmute.
Now everybody's unmuted. Hello.
Hi, I got a question.
Okay.
We restructured our business in January of this year. We went from one business for all of 19, and then we added a second one. But there's a lot of, we basically took a portion of the first business and made it a second business in January of this year. How would, what do you think I would need to do to calculate those things?
Well, I think that actually comes in. I didn't cover that. If your business did not exist in the same form it did back then, or the one thing you have to have been is you have to have been in business. I'm trying to think right here. I think you have to have been in business on January 15th. So did you do this restructuring right at the first of the year?
Correct.
Okay. So what you're going to do is you're basically going to look at your payroll and things for January and February of this year. You're just going to take an average of those 2 months for those existing businesses. And that'll, instead of going back and looking at a year ago.
Thank you.
They do the same kind of thing for seasonal businesses. If you're a seasonal business, you can go in and you can use a different period of time.
Robert, I have a chat question that came to me. Can we include ourselves as owners in the PPP calculation, i.e. S Corp taking a salary? Yes. I mean, the way we are here at the Law Center is Krystal and I are both employees. The IRS doesn't like lawyers doing everything, or frankly, any sub-S doing everything just as a distribution. And so we give ourselves a salary, and it's a salary in excess of $100,000. So Krystal and I are two people. We had to go back. We had to adjust to only count the first $100,000 of our salary. But after that point, we're treated just like any other employee. I have another one here. What to do if the number of employees in February of 2019 is significantly different than the number of FTE employees in February of 2020 due to a change in business operations? Well,
we're not looking just at 1 month. We're looking at 12 months preceding distribution of the loan. So let's assume a loan is going to get issued April 3rd or maybe on Monday the 6th or something like that. what we're going to do is we're going to look back. The figures we used is we went back to April 1st of last year, and we did our payroll averages through March 31st of this year. So if there was 1 month in there, for example, during the summer, I bring in the kids of my other employees. It's my own form of social welfare, I guess. They don't really do much work, but I pay them. And it helps them with their college tuition and things like that. And so, that gives me a little uptick of a full-time employee for 6 or 8 weeks. But when I average it over 12 months, it didn't really do anything. I mean, we literally were pretty consistent at 8.04. But yeah, that's the way the formula works.
I've got another one here, and I'm not quite sure. It says, as an S corp. Now I get it. As an S corp, are distributions counted?
No. It's just your payroll, expenses. So distributions you couldn't use to qualify for additional. In fact, when you turn in your loan, they do ask you for your 940 and 941 filings so that they can verify your figures. So a distribution would not be income. And I talked to a fellow yesterday that he's been running his LLC that way. And this is where it's really going to bite people. If you haven't, you should really, when you're running an S Corp or a small business, you should give yourself a reasonable salary for what you have, and you should pay FICA. You're building up your Social Security that way, and then you take excess profits through distribution. That's going to also hurt, and I'll mention this here, and Andrea, I know we talked about doing a separate phone call next week for self-employed and 1099 people. I will mention they are included in this loan, but they have to do more accounting. In other words, they have to say, okay, here's all the money I took out of the business, and here's the expenses that I had to pay before all of that, and my gross revenues, and so there's just more accounting that has to go on, and that's something probably you'd want to have a CPA help you with to see just what they could include. Now, if you were in the position where you just took distributions, you might be able to delay a week and just call yourself a self-employed person. Where it's going to get more complicated is, for example, the guy I talked to yesterday, all of his compensation was distributions, yet he also had W-2 salaries to his people, and I frankly don't know how they're going to figure that out. And that may be what's bothering the bankers this morning.
Oh, sorry. Go ahead.
No, I'm not sure then this webinar applies to us, and we might need to wait till next week. I'm a sole proprietor. I do video production, sole proprietor, running my business, or LLC, running a business as a sole proprietor. So I'm assuming at this point, since I don't pay myself, we just take a draw out of our QuickBooks. This doesn't really apply to us, and you're going to have another seminar or another webinar next week on that?
Everything applies except that you can't apply today, and you're going to have to look at the rules for how to determine what your maximum loan amount is. Let me just look here. Inclusion of sole proprietors, independent contractors, and eligible self-employed individuals. Operate under those. You're going to have to provide documentation. Submit such documentation as is necessary to establish such individual as eligible, including payroll tax filings, Internal Revenue Service Form 1099s, and income expenses from the sole proprietorship as determined by the administrator and the secretary. That's why you can't apply till next week. Is I don't think they've come out with those rules yet. They are probably going to come out with something of saying, okay, in your situation, Mark, what was your gross revenues from last year doing video production, and what were your expenses incurred for the costs of doing that? In other words, maybe raw materials like did you buy a bunch of stuff? They're not going to make you include. In the divorce world, we basically, when we're dealing with businesses and we're trying to talk about someone's income like yours, we say, what were the expenses necessary to create that income? So I would suspect That's what they're working on right now for people in your position. But I think you do fall into that sole proprietorship, even though you are in the form of an LLC.
And Mark, I'm going to type my email address in the chat box, and if you'd send me your contact information when we get the videos meeting scheduled for next week for sole proprietors and 1099 people, I'll be sure to send you the link.
That'd be great. Thank you. I appreciate it.
And then Robert, I've got two questions here for relating to furloughed employees or furloughing employees. The first question is, what are the benefits of furloughing an employee if you're going to be awarded forgiveness with the PPP program? And the second one is, if you have furloughed employees, what date do you need to hire them back? Okay,
both good questions. The first one is, there are no benefits to furloughing an employee. I mean, I kind of look at this, we're all in this together, and we're all trying to survive through this thing. So trying to figure out, well, I'll outsmart the system. I'll furlough my employees. I'll let them get their extra $600 a week in unemployment insurance, and then I'll bring them in at the last minute. Remember, it's the 8 weeks after they fund the loan. So that means to try that kind of strategy, you're going to have to delay 8 weeks. And if you delay 8 weeks, the money may be gone. And you may have completely blown it. So what we're going to do is, let's assume I turn in my application today and I get money on Monday. I will immediately reinstate the furloughed employee that I'm bringing back. I'll try and hire someone next week. But the answer to the second part of that question is, you have until June 30th to bring back any furloughed employees or fill those positions, because that's what they're going to look at is, what number of employees did you have at the end of that time? And you're going to have to demonstrate that. And I would say bring them back as early as you can.
And so some of these businesses that are closed, so even if they are closed, hopefully not, but even if they're closed past April 30th, they would still want to hire people back to get the full eight
well, and that's the discussion that I heard people talking about yesterday is, okay, why do I hire these people back when we're under a shutdown order for April 30th? And what I keep hearing from the SBA administrator and the Treasury Secretary is, because we want these businesses ready to turn on the lights, unlock the doors, and be back in business. We don't want them to have to come back. We're doing things here. We're starting to write copy for our website. Frankly, I've had stacks of paper that needed scanning at home for weeks and months. I'm just kind of using this as an opportunity to get caught up on some of those other things and, finding alternate things to do. The government would rather have our employees showing up and getting a paycheck from us that is fully paid for by the federal government than to have our employees sort of scatter, not doing anything, breaking their routine of going to work or doing whatever, and then taking 2 to 3 weeks to build our labor force back up once this is over. I happen to believe this is going to be over, probably in 3 to 4 weeks for the worst part of it. And so we need to be ready to go. And, every business is different, but in our situation here, we can write articles for our website. We can do things like that. So now I'm going to take the money as soon as I can get it. I'm going to use that 8 weeks. If you stop and think about it, I'm hiring a new employee. What a great job training program. The federal government is paying for the first 8 weeks that employee works for me. So in other words, I don't have to bring them in at a trainee salary. I can bring them in at the full salary that I would have normally. Normally, when I bring in a new paralegal or legal assistant, I bring them in at an hourly rate that's a little bit lower for the first 60 to 90 days while they're training. Now, that brings up another good issue. One of the other factors besides just full-time equivalent headcount is, did you give employees cuts in pay? You can't just count their headcount. If you're keeping them employed by paying them 30%, there is a formula, and basically, as long as you're within 25% of what their salary used to be, then you're going to get reimbursed for that. But if you try and cut everybody's salary in half and count the full-time FTE, you're not going to benefit from the full forgiveness of the Paycheck Protection Plan loan.
Robert, one other question, and you may have said this and I missed it, but on Wednesday you had also talked about at the end of all this, how are people going to prove that they spent the money the way that they're supposed to?
Okay, so the bank is dealing with their processes. Let's talk about our processes, and that'll probably lead us into the economic impact disaster loan. And I'll pull a page again from domestic relations practice. Most people don't know this, but you have exempt property. Exempt property is listed in a state statute, and should bad things really happen and you have to file for bankruptcy, your exempt property cannot be reached by creditors even in the bankruptcy process. And examples of exempt property is your homestead allowance in your home, as long as you live there. But then we also have a whole list of things, and one of those that affects people who get child support and spousal maintenance is the spousal maintenance and child support is exempt property. But the problem is, if they just take that support and maintenance and they put it in the same checking account with their paycheck, now they have commingled exempt funds with non-exempt funds. And because money is fungible, you can't sit here and say, well, I paid that expense with that dollar, so therefore all of these dollars are mine. The same kind of thinking needs to take place with regard to a Paycheck Protection Program loan. These are loans intended for very specific things: to maintain the expenses of your payroll, to pay your utilities, to pay your rent, to pay the interest on your mortgage, and things like that. So what you want to be able to do, and to make it easy after the fact, is just plan for it. So for example, we actually have an account over at BOK, in addition to our operating account that we run our business out of, and in addition to our trust account we're required to maintain so we don't commingle client funds with our funds. We have another account, we just call it the impound account, or you could just as easily call it the rainy day fund account. What we're going to do is we're going to drain that down to zero, and we're going to put all of the Paycheck Protection Plan loan money into that account, and that account will only be touched for permissible purposes. Now, we'll probably go ahead and pay our payroll out of our operating account, but the moment we pay our payroll out of our operating account, we're going to essentially have a written voucher where we say, okay, we paid X amount in wages and salary, we paid X amount in health benefits, we paid X amount in employer contribution towards retirement funds, and we'll total that up for that pay period, and we will Krystal and I'll initial off on it that we've both reviewed it, and then we will make a transfer of that exact amount from the Paycheck Protection Program account that we have into our operating account. So we have a very clear paper trail. That's what you're going to have to be able to produce to your bank after June 30th, is a very clear paper trail. Right, so I suggest sequester those funds in separate accounts and only use them for permissible purposes, and create your own documentation. I know it may sound kind of silly that you're filling out a form at your own little business on your kitchen table, but it shows you did the calculations, you did them in real time, and you then transferred the money. And so now you can trace that those dollars went exactly toward their intended purposes. So we're going to run out of time, Andrea, if we don't get on to EIDL. So is there one more thing?
Well, Alexandra has a couple of questions. I think I might just unmute her.
Yeah.
It'd be easier than me reading through these chats. Maybe, there we go.
Alexandra, where are you?
There we go.
Good morning, I'm here. Thank you so much for taking my question. I have a client who in the beginning of February 2020 changed their business substantially. If you average out their full-time employee equivalent, it's 14. But since February, it's now only 10. So they're unable to meet that 14 that their average works out to because the business has changed. And they are worried that they will be held responsible for employing 14 people when they don't and can't.
Well, they're not going to be held responsible for it. It just may impact the amount that of the loan that they still qualify for the loan.
Yes, but they're held responsible because it impacts the amount that's forgiven.
Yeah, that's correct. So they might only get 50, 60%. I think what they'd have to do is sit down with a CPA and calculate what that amount is, and see if it really, I mean, if they get a little less money, but they can still have access to the cash to stay afloat at 1% and 2 years to pay it back. Yeah.
Okay. So it's a give and take.
Yeah.
Appreciate it.
Yeah.
And then just one last thing before you move on. I've had two people email me. One must be a Wells Fargo customer. They said that they just got notified that they'll be taking applications on Monday. And then Crystal also had some information about that too. And so maybe she can just share that when she rolls into hers.
Well, is Crystal on with us?
Yes, she did join us.
All right. So what do we know? So Wells Fargo's going to take applications on Monday. I assume Chase probably will. I think the big banks are really struggling to be online today.
So can you guys hear me?
Yeah.
Bank of America tried to have theirs up and running this morning, even though there was an agreement between the big, this is all what I heard at Wells Fargo this morning as their phones were going crazy and I was there for something else. Bank of America tried to have it up and running. Their site has crashed. What Wells Fargo was telling customers is that they hope to have it up and running Monday. There's no guarantee that it will be up and running Monday, and that the big five had an agreement that they would all roll it out at the same time. And Wells Fargo is specifically telling people that they are not, Wells Fargo is not limited by the 359 million number, that they have more resources. So for them, it's not first come, first serve. They will continue giving loans even when the government money runs out. And that smaller banks probably will stop. They will do the first come, first serve and stop when the government money runs out.
It's the thing to remember is the bank is actually funding these from their sources. That's why they had to raise the interest rate to 1% from 0.5%. They're going through their normal channels and getting them funded. It's the feds that are guaranteeing these. But the problem is because they expect so much of it to be forgiven, they have to have the money budgeted. Were it not for the forgiveness, remember, these are loans. And that leads us into the next loan, which is the Economic Impact Disaster Loan, EIDL, or I heard someone refer to it as an EIDL loan yesterday. But the Economic Impact Disaster Loans have been available, and I want everybody on this call to apply for one of those today. Now, how do they differ? Well, first of all, there is no forgiveness on an EIDL. They are a federally guaranteed loan, however, but you're not going to deal with a financial institution. You are going to deal directly with the SBA. So you go to the SBA's website at sba.gov. All right, you look on there for like Corona. We kind of had to search around this morning. Jen and I own a little RV rental business where we rent RVs out. Well, we've got no bookings. I've still got all the payments on my rolling stock. All the state parks are closed, and I'm looking at having to make payments on all of these RVs for probably the next 3 or 4 months with zero revenues. All right. So what I can do is I can apply for an economic impact disaster loan. And even though this wasn't a high revenue business, it was just sort of a little small side business I have, one of the great features of the EIDL is there is a grant program associated with it. So we went on this morning, found it on the website. You fill in your business information, you fill in your tax ID number, you fill in your gross sales and what your cost of goods were, if you had any costs of goods. You certify that you don't have over 500 employees, that you're not under indictment, you're not a convicted felon, that you haven't defaulted on a federally insured loan in the last 7 years. You provide information as to the ownership of the company. And when all of that is done, it goes to a different page, and that different page says, would you like a $10,000 grant? And you say, yeah, I think I would. So you put in the name of your bank, you put in your bank routing number, you put in your bank account number, you certify that everything you said in the application was true, and you click send. I can tell you that my wife, Jen, filled that out this morning, and I don't think it took her 5 minutes to fill out an economic impact disaster loan application with the SBA. I did it for the law firm probably 2-3 weeks ago, but before the CARES Act passed, so I had to go back and fill in another application. They're going to take it and apply it to my existing loan application, which had already been partially processed, and they're going to move forward. The law actually says the SBA has to give you this grant within 3 days of asking for the money. So I don't know. I haven't checked our account over at Bank of the West, which is where I was putting it, because again, I'm going to segregate my PPP loans and just use them for payroll. And then whatever I get as an EIDL loan for the firm, which is not based on payroll. My EIDL loan is based on a combination of my gross revenues and things like that. So they ask for copies of my tax returns. Now, the nice thing is, as part of the CARES Act, they relaxed the qualifications for an EIDL. So for example, no personal guarantee on an EIDL of $200,000 or less. So if you're thinking, okay, I've got all this stuff going on, I'm not sure I'll get reimbursed, I'm going to apply for both, and I'm going to take the EIDL funds and I'm going to set those aside in a different account, and those funds can be used much more broadly for general business overhead, which means I can pay my copier leases with them. It means I can pay the lease on my associate's car with them. I can pay auto insurance, property and casualty insurance. General operating expenses of the business I can pay with the loan from EIDL. The loan amount on an EIDL is determined by your gross revenues. It carries an interest rate of 3.75%, and you can have up to 30 years to repay it. Now, they're not going to just routinely automatically give you 30 years to repay this thing. They're going to look at it and say, okay, a reasonable amount that your cash flow can handle would be this, and so we're going to ask you to repay it in that amount of time. But again, the number one distinction, while we were talking earlier about going to Wells Fargo or First Bank or BOK or Chase and applying for your PPP loan for payroll, an EIDL loan is direct with the SBA. You can fill out an application for it online in less than 5 minutes. They have waived a lot of the tax return transcripts because they don't need to figure out some of the things from that, because those have been waived as part of the program. They have waived the requirement of a personal guarantee up to a $200,000 loan. They will still try to collateralize that loan if there is collateral available. But if you've got no equity in your house, or you can pledge your receivables, you can pledge your fixtures and equipment from your work, there's no reason not to apply for an EIDL loan. And that's because that $10,000 grant that they give you is just that. It is an immediate grant the SBA is supposed to fund within 3 days of you asking for it. And even if you are later declined for the loan, let's say the revenues of your business aren't enough, or they find that you're a poor credit risk. One of the things they did, instead of having you send transcripts of your personal tax returns and things, they can grant you an EIDL loan now just on your credit score. So if you've got a decent credit score in the upper 7s or 8, you're not going to have a problem getting an EIDL loan. But even if you don't have a good credit score, you still want to apply for the EIDL just to get access to that $10,000, and that is a grant. It is not a loan. It is money that you can use immediately to try and meet your needs. So let's see here. None of that is forgivable except the initial $10,000. Oh, let me mention on the $10,000 though, if you go on and you get the EIDL and you get the $10,000 grant, and later you apply for forgiveness of your PPP loan, they will recoup the $10,000 there out of your reimbursement on the PPP loan. So that's the only caveat there. But still, it's a great infusion of cash. And there are other programs on the SBA site, express loans. If you've got an existing relationship with a 7A lender, somebody like that, one of your banks, they can also get you, I think, up to about $50,000. Again, if you're getting both the PPP and the EIDL loan, you cannot use them for the same exact purpose. Although I did read a white paper by an accounting firm out of Washington the other day, you could, if you felt you needed to, segregate and pay certain employees with the PPP funds and pay other employees with the EIDL funds. And as long as you could account for that, then that would be all right. We're going to do it a little cleaner. We're just going to use the PPP loans just for payroll and payroll related expenses. We're going to use EIDL loans for more general overhead of the firm. And frankly, you know, there's no prepayment penalty on either of these. So because of the uncertainty, I'm going to ask for the maximum amount I can without a personal guarantee, which is $200,000. I'm going to put it in a separate checking account, and I'm going to just let it sit there till all of this blows over. And I'm not going to go on a spending spree, but when all of this blows over, I can say, okay, well, the storm has passed. Let's just pay back $150,000, and then we'll finance the rest of it over the term. And that just about covers it. And we're about the same time we did yesterday. So let's take Q&A for about 5 minutes on the EIDLs if we want to, Andre.
Okay, and I've got one question that I just happened to glance at my phone, and I had somebody send me an email with a question. And then Krystal, stand by, because we do want to hear from you on the notary and the payroll tax stuff. So if a person owns two businesses with two separate tax IDs, one is an S Corp and the other is an LLC, can we apply for the PPP loan separately for both companies?
I do not read that there is a prohibition on that. Again, if you look at the purpose of the PPP loan, they don't care you got 3 different businesses. If they've got payrolls, the point of the PPP loan is to keep people employed and have those businesses ready to go when this all blows over. So you know, they may have to do some explaining. When you apply for the PPP loan, it does ask you if you have a management or ownership interest in any other businesses. So I think the main thing here is be transparent about it, be upfront about it. So it says if you do, attach an addendum A to your application, which I actually did this morning. I just took and made 3 columns, and I said, yes, the Law Center PC wholly owns the Citizen Armory. And I said, this is what it is, this is what it does. All right, and it has its own manager. Then Krystal owns Colorado Fiduciary Services. She owns 100% of it, and this is what it does. I own my little RV business. I also listed an alternative dispute resolution business, Family Conflict Solutions, that we just haven't gotten off the ground yet. But because it's a formed entity and it has a taxpayer ID number, I listed that down. So when dealing with the federal government, just being open, honest, and transparent, not trying to conceal anything, I think you're going to be fine there. And if you legitimately have payrolls for 2 businesses, I read nothing in the law that prohibits you from asking for PPP funding for both of those.
And I don't have any other questions in the chat box right now.
Okay. Krystal, you need to close your blinds. You're glaring. I closed mine. They're still glary, but I closed them.
A lot of light in that building.
So any other questions?
I'm not seeing any.
All right, well, let me do this. I'll give you all my phone number. When I'm giving general advice like this, we're not forming an attorney-client relationship. If you've got a question and it's kind of general in nature, just call me at 303-991-5201, and I'll try and help you. If it's to your specific situation, Krystal and I are subject to the Colorado Rules of Professional Conduct. And it basically says, if I give you specific advice upon which you're going to rely, we're forming an attorney-client relationship. So we kind of have to be careful about that and just giving free phone advice, that sort of thing. But I'm happy if you've just got something general. Just give me a call at 303-991-5201.
All right. Do you want to introduce Krystal? You probably do a better job than me.
Sure. Now that the glare is gone.
I always get your titles wrong, but I know you're the CFO.
Krystal and I, there's a joke in the office because one of our former chamber members, I won't disclose his name, used to always say, "You still working for Robert?" Krystal has never worked for me. Krystal, from the day she arrived at the Law Center, was my equal partner. And I always tell people I'm the luckiest man alive. Krystal's strengths are my weaknesses and vice versa. So we sort of divide up. I'm the CEO and I take care of negotiating things and stuff like that and maintain the network. And Krystal is our chief financial officer because I can't add worth a damn. But, I'm very fortunate. She's very good friends with my wife who works in the firm. Very intelligent, probably one of the best estates and trust planning lawyers in the state. Hers is actually a multi-state practice across Nebraska, Kansas, does huge multi-million-dollar farms, tax planning and things like that. I refer to her as the little sister I never wanted. But she is really bright when it comes to taxes. Or as I say, as someone who didn't do all that well in school early on, she's a summa cum laude B school graduate. But if you need business advice or tax or estate planning, boy, Krystal's the person to rely on. And I couldn't be more pleased to have her as a partner. So Krystal, tell them how this is going to affect. I know there's some deferral of payroll taxes. There's some bounces in unemployment. I'll turn it over to you, Krystal.
All right, and I'm going to try and share my screen. I haven't done this yet, so we'll see if that works. Did that work? No, I can't hear people though.
It did. Put yourself in slideshow mode though, would you?
I don't know how to do that.
Right up the top there where it says slideshow on your menu. You want me to come in there?
Yeah.
All right.
So when I did it, I should probably unmute.
It's right up here.
Oh, on this one. Okay.
Yeah. And just say start from beginning. There you go.
Okay. So you guys see this?
And we can hear you and they see that.
Yep,
not me.
I can hear you and see it.
Okay, perfect. All right, so then how do I go to the next one over here? Perfect. Okay, so the 4 things I want to cover today are under the CARES Act, there's an employee retention payroll tax credits for employers. There's a deferral of employer payroll taxes and there's some retirement plan relief built in there. And then on, I think it was Monday nights, the Colorado Secretary of State provided us with the written remote notarization rules.
Get rid of that little orange box. There you go.
That box there. There?
Yeah.
Okay. So first, we'll cover the employee retention payroll tax credit. This is something, it's not available to employers that receive a loan under the PPP. So anyone who gets a PPP loan will not be using the employee retention payroll tax credit. For those who do not receive the PPP but want to get some employer payroll tax credits, this is a refundable tax credit against employment taxes paid by an eligible employer. And the employment taxes are that 6.2% we as employers pay in, along with employee withholding that we pay to the IRS. An eligible employer defined in the CARES Act is an employer who, if during any calendar quarter of 2020, either has their operations fully or partially suspended due to a government order related to COVID-19, or has a decline in gross receipts of more than 50% compared to the same quarter of the prior year. So there's 2 ways you can qualify, that you don't have to meet both. However, if you're going with the gross receipts qualification, if during that quarter gross receipts exceed 80%, even if they go back to 50% at the end of that quarter, you don't qualify. So you have to stay under 50% decline for the entire quarter. The payroll tax credit is equal to 50% of the first $10,000 of qualified wages paid to employees between March 12th of this year and January 31st of next year. The definition of qualified wages differs for the size of the employer. For eligible employers with more than 100 full-time employees, qualified wages only covers wages paid to the employees who are not providing services during a COVID-19 related impact to the employer. If you have 100 or fewer employees, qualified wages covers wages paid to all employees during the quarter. And the 50% of the 10,000, so for each employee, you get a credit of up to $5,000 total, depending on how much you paid. So it could be less, but it won't be more than $5,000 per employee. For the law center, for instance, we pay our employer share of the taxes at the same time we run payroll. It gets deducted out of our operating account and goes to the IRS. It's unclear whether employers like us who make the deposits with payroll can claim the credit and get a refund, or if it rolls forward if you want to use it. If you pay your taxes quarterly with the 941, then you just claim the credit on the 941. And it's my understanding that the IRS is working on a new 941 form to address that credit. Or there's a form 720, which is a new form that you can apply for the credit on, but you won't do both. It'll be either or. And also qualified wages, for purposes of calculating qualified wages, includes qualified health plan expenses. So if you carry insurance for everyone, you can include that in qualified wages. Questions on that?
I'm not seeing anything.
This is super sexy stuff, I know. So, and I can't see the chat. I don't know if I'm supposed to or not.
You can, if you, you should be able to see a chat bar. Some people have just sent me private messages, but there's nothing in there.
Okay.
I'll let you know if I see anything.
Okay, super. The next topic is the deferral of payroll taxes. This is not available to an employer that receives loan forgiveness. So you can get a PPP loan and qualify for the deferral of employer taxes. But if your loan is forgiven, then you won't get this deferral opportunity. So again, this covers that 6.2% that we as employers pay in. Employers and self-employed individuals can defer payment of the employer share of payroll taxes on wages paid for the period March 27th through December 31st of this year. And so you would put that on the 941, which will be revised to elect this deferral. It applies to all employers. There's no requirement to show any specific COVID-19 related impact. You are deferring the taxes, so you have to pay 50% of what's due on December 31st of 2021, and the other 50% is due on or before December 31st of 2022. My caution on this is it is a deferral. You have to pay it. And so payroll taxes are dangerous and scary, and the employer is ultimately liable for them, the employer individually. The IRS can go back on the employer's individual assets and resources to collect these payroll taxes. So it is a way that you can get quicker access to funds, cash flow, but I would put the money aside if you can put it aside and know that it is simply a deferral. It will not be forgiven. That's that one. That was a short one.
Krystal, can I ask a quick question?
Of course.
So when would someone take advantage of this versus the PPP, or in your last slide too, even the I forgot what the term was, but
Yeah.
With those taxes, what was that if someone gets
tax credit? So I think everybody who has employees should apply for the PPP. Some people may not get it. I don't know. It sounds like they're wanting to give it to everybody. There are some people who are not going to apply for the PPP because they find it time consuming, or it's not happening, or they just don't know about it. to me, these payroll tax credits are a way to, during this period of time that we don't know how long business is going to slow down, it gives them a little cash flow that they can use for other things. The payroll tax credit, that is a credit. It is money you don't have to pay in as an employer. So per employee, up to $5,000 during that period of time could be a lot to keep their business going, and a reserve for marketing once business picks up.
Gotcha. Thank you.
I think these are two ideas that were thrown out there to help. I think the PPP is going to be much more help to employers because it is, like Robert said, free money if you get it and use it for payroll and the allowable expenses. But I think this is just something. There are also employers, and I honestly, Robert's done most of the PPP work for us, but I understand that if you have maybe more than 500 employees, you don't qualify for the PPP.
Oh, correct.
It's
Yep.
difficult to
That's a good,
qualify. So this is something that would apply to those employers.
yep, that's a good point.
All right. For individuals who have retirement plans, there's some retirement plan relief built into the CARES Act. So what's in there is plan participants. And a plan participant is someone who has a 401k or a 403b or some other employer sponsored plan. And IRA owners, so someone who has a simple or their own IRA or a rollover from somewhere else. Not inherited IRAs. It's my understanding this doesn't apply to inherited IRAs, but if it's your money in there and you are affected by COVID-19, you can take up to $100,000 in coronavirus related distributions from those qualified plans and IRAs during 2020. And those withdrawals, distributions will be exempt from the 10% penalty that's typically applicable to early withdrawals. A coronavirus related distribution is defined for purposes of this retirement plan relief as any distribution from a tax qualified defined contribution retirement plan or an IRA made in 2020 to an individual who either was diagnosed with the virus SARS-CoV-2 or with COVID-19 by a test approved by the CDC, or whose spouse or dependent is diagnosed in that same manner, or who experiences adverse financial consequences as a result of being quarantined, furloughed, laid off, having reduced work hours due to such virus or disease, being unable to work due to the lack of childcare due to such virus or disease, or closing or reducing hours of a business owned or operated by the individual due to such virus or disease. So it's pretty easy to qualify under the last one. And again, you can take a distribution up to $100,000 out of your qualified plan. If you do take a coronavirus related distribution and you recontribute all or a portion of that money to an eligible retirement plan or IRA, it doesn't have to be the same one. At any time within the 3 years after you take the distribution, it'll be treated similar to a rollover contribution, and no taxes will be due on the original distribution. So you have up to 3 years to pay the income taxes on that. And if you recontribute it in the 3 years, then there'll be no taxes due. If they're not recontributed, the plan the person who takes it has up to 3 years to pay taxes on the distributions. It's an election that you have to make. And I'm not sure yet where you make that election, but I can find out if anyone's interested. The retirement plan relief portion also temporarily increases the amount an affected individual can borrow from a qualified plan account to the lesser of $100,000 and 100% of the vested account balance. So you can take a loan based on the assets in your retirement plan. You will want to pay that back. And then in 2020, required minimum distributions are waived. So nobody in 2020 is required to take a required minimum distribution. That's all on that one.
I don't see any questions. But I'm glad you presented this, because I've been so focused on all the business stuff, not the individual relief, and I had no idea that that was in there. So that's good to know.
And the last topic is remote notarization in Colorado. And again, this is something that was just issued this week. Anyone who is a notary who's interested in doing remote notarization, I strongly encourage you to read the new Rule 5 of the notary program rules. So rules 1 through 4 of the notary requirements in Colorado stayed exactly the same. Rule 5 is now a new rule titled remote notarization. A lot of the same requirements that we had before. It's always been the case where you have to notarize in the state of Colorado. I can't go to Kansas and notarize a document. But the rules under remote notarization, and these are temporary for right now. We don't know how long this will last. As an estate planner with elderly clients, it would be really nice if these remained in place. But I think it's also a learn as we go. So to use the remote notarization, the notary and the signer must both be within the state of Colorado. So we can't have a client in another state signing documents and us notarize it using audio-visual technology. You have to be able to communicate simultaneously, the notary and the signer, by sight and sounds. We did our first one yesterday and used Zoom. You can also use FaceTime. The notary certificate changes to indicate that the signer's signature and our witnessing of it was performed using audio video technology. And again, there are probably a lot. We can FaceTime, we can Skype. You have to, I'm skipping one, but you have to record the act. So you have to record the people, you as a notary have to record the people signing. And we did that yesterday using Zoom and then just uploaded it into their client file. You have to, the notary has to retain the recording for 10 years. And there are a lot of requirements for identifying the person who signs. Yesterday we had them hold their driver's license up to the camera, and it took a little time for it to be clear enough for the camera to focus so that it was clear enough for us to read it. But they held it up there. Jill wrote down their driver's license number in her notary book. So they have that documentation. We have a script that we go through that's where we identify the parties, we identify what they're signing, we disclose first, you disclose that the signer is a remotely located person and that they consent to both the recording and the storage of the recording, and that it will be recorded for 10 years in our system. And there's this checklist, it's quite lengthy, in the statutes of what the notary has to do. They have to give their name, the date and time, describe every document being signed, the identity of the individuals if they're witnesses, the identity of the witnesses, and then the way everyone's being identified. So whether it's by driver's license, passport, that sort of thing. And then the person signing has to vocally, verbally acknowledge that they understand all of that information. Any document can be notarized remotely. There are special rules for wills, but for the rest of documents, anything that is notarized remotely, the signer must get their signed copies electronically back to the notary the same day of the signing. So yesterday they scanned and emailed them to us. You can fax them. I'm not sure if you can text copies. We haven't had that happen yet. But that's, I think, the most difficult hurdle in this is making sure the person on the other side has the technology to get the signed documents back to the notary so they can be notarized that day. For wills, the rules are a little different. For wills, the original has to be sent back to the notary within 15 days of signing and notarized within 15 days. No, that's not right. Within 3 days. the notary has to sign it. So there are special rules for wills, which probably won't apply to anybody else on this call except Robert, maybe. But it has been very helpful. I think there will be some changes to it as everybody works through it. And I know on a couple listservs I'm on, there are already a lot of suggestions on how it could be better and what's not working well. But for my practice, and I imagine in the real estate world, this is going to be very helpful to allow us to continue operating during this time of social distancing.
Nice. Does anybody have any questions related to notary? I know there's a couple people on here that that do that. I'm not seeing anything in the chat box.
Super.
Give them a couple more minutes. And I'm not sure how to. Oh, I think I can unshare your screen. There we go. You're back. Robert, do you have anything that you want to add or before we're done for today?
No, unless anybody had questions that popped up since I ended my stuff, but
No, I haven't.
I just checked to see if I'd heard from my banker. I haven't. So we'll see.
I did get an email from the SBDC, our local SBDC office, while we were on this call, and it does say that the SBA is still updating the SBA link to certified or eligible lenders in Colorado, so be patient. So it's going to be a process for everybody to get all the information that everybody needs in one place and working. So hopefully I'm sure they'll be working hard in the next few days to get that up and running by next week.
And remember, there's nothing, just because the PPP isn't online yet, get online and request that EIDL and the $10,000 grant. I was just looking at the participants across here, and there's no reason not to get on. Take 10 minutes. If I told you there was $10,000 lying on the ground outside the office building, you'd go out and pick it up, wouldn't you?
Somebody did send me a message just a few minutes ago that while they were listening to the rest of the call, they did the application and it was super easy. So they did
There you go.
10 minutes.
All right. Well, thanks for joining us.